Hi everyone, welcome back to the podcast. Keshav with me, and we're going to try and finish what we started the other day. We started price to earnings.
Yes, sir, and face values.
Face value. So the rest of the things which Keshav bought, we'll talk about that and get that done. These are basically the essential things you should look at when you're thinking about looking at a stock or a company to buy or invest.
Yes. So today we are going to talk about book value, sir. This is book value. Most of the investors, they will see it as an important fundamental thing in a financial sector, sir. So the first thing you have to see in a financial sector is book value. After PE and all, you have to see book value. That is also one of the main things in the fundamental aspects of a financial sector. So next, you can have a question of what is book value. Book value is nothing but that is the asset value of the company. The whole asset put down together, that is the book value of a company. So book value doesn't be constant. It changes every quarter. Every quarter it changes. So book value is also directly proportional to the profit and loss. So if the company is in a loss position, book value also goes down. If a company do more profit, the book value goes up. This is the things that are in the book value. If you want to calculate the book value, you have to do total assets minus total liabilities. There you get the book value. So as you said, if in a financial sector we see banks and all, the banks has to have a book value of either 1 or below 1. Anything that is above 1 is not like a bad company or all. It is like a expensive. If a book value is around 1 and below 1, it is something we can afford. But if it is more than 1, we can't afford. It is like a diamond needle. So these are the things in book value, sir. Next one is ROE, sir. Return on equity. So this is also something that is interesting to study. But when I use the formula they gave, it doesn't give me a proper value, sir. I tried with most of financial sector banks like IDFC First Bank and all. It doesn't give a proper correct value. So I'm just going through to find which is the best formula to do used on to get ROE, sir. So first, if you want to know the ROE, which formula I used is net income by shareholders equity, but still I didn't get the proper answer. So if you want to know if a company is a good company or not, if you want to check the ROE, if the ROE is around 22% and above 22%, the company is doing very well in the business, so you can probably consider the company. And the ROE is nothing but when you know ROE, you know the management performance. So that is why investors see ROE. And in ROE, the most important thing you need to do is sector comparison. And ROE can be changed only on early basis, not on quarterly basis. And if a company needs to raise their ROE percentage, they can do a buyback. By doing buyback, they can increase their ROE percentage. If you are going to see ROE on a sector or on a company, you have to see it in a historical way, like 5 to 10 years or 5 to 15 years like that. You can't take just 3 years or 4 years of a company and see a ROE. That way you can't find whether your company is good or not. And these are the things in ROE and book value, sir.
Okay, so book value, the main thing is what you have to keep in mind is price to book. Price to book you have to calculate. Price to book is like how you calculate PE. You have to calculate price to book for banks and financial companies.
Yes, sir.
The main reason why financial companies look at price to book alone is because in a finance company like a bank, there are only two things in their business.
Yes, sir.
One is they take deposits, the other is they lend money. Other than that, there's nothing else in their business.
Correct, sir.
So any form of other PE, we look at other industries because the income can be from various sources. The earnings can come from various sources. But in banks, the earnings are only from deposits and lending
money.
Yeah. So by taking the book value and dividing it by price, it gives you the ratio of anything below 1. It's considered to be a good investment. There's a good opportunity for that bank or that financial institution to grow.
Correct, sir.
Anything that's above 1 is considered to be expensive. But this day and age, we have pushed that number up to even 2. That even a 2, you can consider it to be a good buy or below 2 because the Indian market is so skewed towards one side right now, where we've been in a bull market for so long. Even if you buy something below 2, there's a good proposition for that bank or financial institution to grow though HDFC is a fantastic bank, ICICI is a very nice bank, IndusInd is a very nice bank, all those price to book, if you see, are very high. And we're looking at very small banks like South Indian Bank, and we're looking at Karnataka Bank and all those, because those book values are much lower. So if you see, especially over the last 1 year, if you put money in South Indian Bank and you're putting money in HDFC Bank, both have grown a little bit. But South Indian Bank, the growth is much larger compared to HDFC, because the growth in South Indian Bank was below book. It's going now above book, and it's going well past 1.
Yes, sir.
So you can see that. While HDFC was already at very high, has seen actually a correction. And that's why in the last results which were announced, HDFC has performed better than South Indian Bank. Okay? If you see just apples to apples, you compare, they performed much better in all the metrics. But the market pushed HDFC shares down by punishing it, by selling it, while South Indian Bank went up for more. So this is the reason.
Understood, sir.
This is the main reason we look at it. You just cannot buy it. When we're saying diamond-headed, the reason why you buy something is you're investing here.
Correct, sir.
What happens to investors, you tend to lose your focus on the goal. Okay, when you're playing cricket, it's to score runs.
Yes.
You're not playing just to show a fancy shot. If you're showing very classic shot and you're showing great form and just defending the ball after ball you're defending, everybody look at you and say, "Hey, what's wrong with you? Take some runs." But a batsman who's batting very badly, like so, if people don't mind watching Harbhajan Singh bat, because he'll randomly hit. You see a tail-ender bat, it's always entertaining.
Correct,
because
sir.
if he touches the edge of the bat, it goes for a 6.
Yes, sir.
Otherwise, he'll get out.
He just swings.
Yeah. So that's how your investment should be. I don't want you to bat crazy, but your goal should be to consolidate some runs.
Okay.
Get those 1s and 2s, get those 4s whenever you can, get a loose ball. You should try and grow your wealth. It's not about how good you're batting. So that is why it is important to study price to book and study price to earnings. Those two are very fundamental. And no matter how much we tell people, people tend to lose focus on it. That's because you're analyzing so many metrics and you're so focused on analysis that you have forgotten the reason why you started the analysis.
Correct.
Right? So somewhere along the line, you have to say, okay, this is enough analysis. We need money to grow. Let's put money where we see maximum growth opportunity. The same is true with ROE. ROE is a metric which is really tough to see. Yes, it is a number. Like anything else, it's just a number. You have to study much further, and especially when you see ROE, you should check not only for this year, last year, you should check for 6-7 years.
Correct.
That too, because of the pandemic, you have to check for that gap and check a little before that.
Yes, sir.
Then only you'll understand actual trend on how the company's return on equity is going. And if there's a dip in return on equity, you have to get down and see, has there been a fundamental business problem or is it just something, a cyclical nature of the business where it's running like that? All right. Okay. These are two main things to remember on this. But I think other than that, you've done very well. Your understanding of this is spot on.
Thank you, sir.
I have no reason to think you can apply this and make some good investments, Keshav.
Thank you, sir. Sir, and I want to update you another thing that when we did a video on P and face value, you saw the video and you told me that have you seen the learn to earn video? It's performed well and everyone is congratulating you. When we did the second part, I think so, sir, book value on ROE in learn to earn, they also congratulated you. I saw that in the comment section yesterday.
Keshav, my congratulations is your congratulations, Keshav. Sir, if you have gone and done well and you're going forward in life and moving up in steps, that is what makes me happy.
Yes, sir.
The rest of this is only shooting breeze, as I say, or passing clouds, as you want to say.
Correct, sir.
Right. For me, my happiness is I see you growing and moving forward and achieving greater things. That gives me great happiness and where I feel okay, I've been successful.
Correct, sir. But when I read those comments, when I feel happy is everyone said congratulations, Keshav. Well thought, Mr. Vinod. Like the things, they are completely known now, sir. Who is teaching me and all and things like that. When I see that, I felt happy. So that's why I'm sharing with you.
But my job with you is done. You have now learned how to read. You have learned how to take notes. You are able to understand information. From here on, you can go on your own. And continue reading and continue learning and continue taking notes.
Yes, sir. Definitely.
And here, you know now how to fish. And you know how to catch fish.
Yes,
you
sir.
know how to set the rod. Everything you know now. And you've done a few practice rounds with me. And now we're ready to go and catch nice big sharks and whatnot in the ocean.
Okay.
You don't need me holding your hand anymore. So it's good. Yeah, that's good. I mean, I'll miss, sitting and teaching you to fish. But now that you're here, you should spread your wings and fly, man.
Okay, sir.
Greater heights.
That's
life is nothing but change. Change is good.
Yes, sir. True.
That's why it gives meaning in life, because of change. If there's no change, then life will become meaningless.
Correct, sir.
Who will want to be a rock just sitting on the side of the road? Now and then you must roll, no? Be a rolling stone. Anyway, thanks for watching the podcast, guys. I hope you found it informative and entertaining, and we'll see you in the next one soon. Bye.
Bye.